Hi, I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. I'm a retired financial advisor, so I've been up and down this road a couple of times, and I think I have some insights that a lot of other people don't. And I'm a long-term investor. I just don't believe you can beat the professionals at their game, and that is Wall Street at trading stocks on a daily basis. So I'm getting away, further and further away from trying to predict what's going to happen in the next week, next month, even the next year. But I do think I can give you a pretty good insight as to what's going to happen in the next 5 years, and I want to substantiate that insight. And based on the thumbnail, I'm going to predict that I can tell you how to 3x your portfolio over the next 5 years based on the stocks that you buy, and the title, the 250 stocks that you don't want to own. And they are all in the S&P 500, but you don't want to own them. And I'm going to tell you in this video why I don't think you should. And then I want to address the performance of the market over the last 3 months. Why is what has happened, and what is going to happen going forward, and what you need to know in order to truly build a strong portfolio over the next 3 to 5 years. So that's what I want to talk about today. I don't want to talk about what's going to happen next week. And we will touch a little bit on the stimulus package and interest rates and taxes, but let's get at it. So give me a second here to collect my thoughts. Let me give some disclosures here, and then we'll get into this.
Best of Us Investors presents Kerry Grinkmeyer.
To get to the end of the video quick, so you don't have to stick around if you don't want to, the stock market over the next 3 to 5 years is going to be driven by innovation, not inflation, but deflation, and the fact that the stocks of 3 to 5 years are at all-time bargain prices right now, and I think you should be buying them. I'm going to pick up a check for a house that I'm selling that I built for about $425,000 the end of this month, and I know exactly where I'm going to put it, because what I want to own is being sold right now at bargain prices, and I'll share that with you. That's where my $425,000 is going June the 1st. So let's first of all address what's happening in the market right now. We've had a rotation. We've had a rotation away from disruptive stocks, innovative stocks, towards the value stocks. The stocks, actually, if you look real deep, you'll see that these are the stocks who performed worst in 2020 and now have performed best in the first 4 months of 2021. And that's kind of understandable. If you were down 56% in 2020, like the cruise lines and the oil companies and the airlines, if you were down 35 to 40%, it stands to reason that if there is a rotation to value, well, let's go there. And so you see that thus far this year, the energy performance is up 40%. That's your oil companies. That's your drillers. So they're up 40%. The second highest performing area is that of the financial services. They got beat up in the end of 2020, but and then real estate is up. Heck, the prices of homes are going up. The inventory is going down. I'm building a house. I started it in February of 2020. We said that we'd have it done in 7 to 9 months, and we're already up to 14 months. And thus the availability of new homes is down. So Prices of new homes have gone up. You add to that the pandemic and the relief programs have made my subcontractors kind of homebound. They can make more money by collecting their relief checks, their unemployment checks, than they can showing up and putting on roofing or laying brick or anything of that nature. So they aren't working. They just don't show up. So that's part of that. Then we have the auto industry is up. They're getting record prices for their vehicles because they don't have supply. What is that about? Well, that's because we don't have the chips to go in them because our supply chain was broken, and we didn't think we were going to be selling cars in 2020 during the pandemic, so we didn't make the supply the chips, and now we're trying to get the chips made more and more so that we can get back to the car industry. And so these industries are performing extremely well, while the innovative stocks that performed well in 2020 are down 30 to 35%. So the question becomes, okay, that's past history, Carrie. We know that energy's up, financials are up, housing's up, autos are up, and innovative's down. What's going to be the future? Where should I put my money for the future? Well, my thinking is, or let's take one step back. One of the reasons they're saying also is inflation. We're going to expect hyperinflation because interest rates are going to go up, taxes are going to go up. No, the next 3 to 5 years is going to be a period of deflation. Now, you heard me right. Deflation. Well, why is that? Because the industries that are changing are coming down. The prices are coming down. What do I mean by that? Well, healthcare. Has the price of healthcare ever gone down? No, it never has. But now it is. The price of genome sequencing, 2000. It would cost you $1 billion to get your genome sequencing done. It's now down to less than $1,000, and it's dropped 20% thus far this year. Well, what does that mean? Well, that means that the cost of making pharmaceuticals are going to go down because we're getting better at it. We have CRISPR that's going to change the world, the healthcare world entirely, and it's going to deflate the cost of pharmaceuticals, the cost of administrating cures for diseases. If we eliminate cancer through CRISPR and genome sequencing, is that going to reduce the cost of medical field? Yeah, people aren't going to be getting cancer or Alzheimer's or Parkinson's. So we have a deflationary situation there. We then have the fact that the financial industry, which is a very heavily expensive industry and archaic, is being revolutionized by people like Square, by cryptocurrencies. Look to China. China has already developed the digital wallet where you now don't have to move your money through a bank. You move it through blockchain. You cut out all those fees. I was telling my investment team this morning that I want to pay them for the work they're doing, but I don't want to pay them on a weekly basis. I want to pay them on a monthly or quarterly basis because the bank charges me for every transfer that I make. They charge me $10, and then they come back with a monthly transaction fee of another $10. So it costs me $20 to send a check or a transfer of funds. That's going to be gone. That's going to be history. So those companies are not going to be with us. In the title, I said 250 stocks you don't want to own. Why did I use that number? Why did I say 250? Because in the next 5 years, 250 of the S&P 500 won't be in the S&P 500. They'll be replaced. Let me take you to the bottom of the S&P 500 for 2000, which is going to give you some indication as to who some of these 250 companies are. Watch this. What I'm showing you here is a chart of the performance of the S&P 500 stocks in 2020, and I'm starting at the bottom. And as you can see, the two bottom are not a surprise. They're two cruise companies, the Carnival and the Norwegian. And they are both down 56%. What you'll then see is a number of oil companies. Why is this? Well, the fact is that people weren't driving their cars in 2020, so they weren't buying gasoline, they weren't changing their oil, and as a result, your oil companies performed very poorly. Well, if we equate this to what's coming in the future, and that is the cost of batteries are going down. It's projected that 80% of the autos on the road are going to be electric vehicles by 2030. GM says they'll be out of the internal combustion engine automobiles by 2036. These companies are going to fall out of the S&P 500. I think that's a given. So you need to decide, do you want to be involved with them now or in the near future, or do you want to go and be invested in the companies that are going to replace them? The other issue that that's going to affect this is the fact that who has the smaller cap on and thus will fall out, as Tesla replaced, I don't even recall who it was. They had a larger market cap and thus replaced them. These are the stocks that are going to have the lower market cap. So you may see Carnival, Norwegian, and Royal Caribbean fall out as well, not because they aren't being used and they aren't possibly showing profits, but the fact that their market cap is going to come down. You're also going to see number of airlines in here, more and more of the oil companies, and so they're going to fall out. Then I think then the next thing you need to be aware of is the deflation in the area of healthcare, and I don't see any companies here that in fact are going to be affected by the decreased cost in delivering healthcare as a result of immunotherapy and genome sequencing and CRISPR and things of that nature. But those companies are going to grow in market cap and thus will replace somebody maybe like Tyson Foods. There's again more oil companies that will fall out of here. They just won't be there. Here's Hewlett Packard. I'm not quite sure why they had such a bad 2020. The next one I think that is going to be highly affected is that of the financial industry. And here's Citigroup. We'll probably find some other. FinTech is going to change the financial industry. People's United Financial, not quite sure what they are. U.S. Bank Corp. We have a frustration, at least I do, with the banking companies and the matter of a digital wallet is going to basically change our dependence on the financial companies in the future, and they will fall out of the NASDAQ 500. So I think you can see, I think in actuality, the fact that the coronavirus reduced the demand. Here's the Bank of New York Mellon Corporation. This is an indicator of the reduced demand that's going to come in the future, not as a result of a pandemic, but as a result of a change in the way we want to do business. So let's look at this a little bit further, but I think this gives you some insight as to who the 250 companies are that are going to fall away from here. By the way, this is Kiplinger.com, investing stocks. and I put something in there about performance of the S&P 500 stocks. So you can find this on your own. So let's look at this a little deeper. As you can see, the bottom of the 250 of the bottom of the S&P 500 last year was cruise ships, oil companies, because and think about that. Why were oil companies down so bad? Because of the pandemic, we weren't using gasoline. Does that make sense? Okay, substitute the word for batteries for pandemic. Because of batteries, we aren't burning gasoline. What? Yeah, that's exactly what's going to happen. Because of a transition to electric vehicles, we won't be using gasoline. So you can look back to 2020 and see exactly what's going to happen as a result of not using gasoline in a period of time. But this period of time isn't going to be for 12, 14 months. It's going to be forever. So those companies are going to disappear. So if you own any of them and you're a long-term investor, get out of them. They aren't going to give you a return. Then you have, as I said, the medical industry is going to deflate. So you don't want to be in many companies that are involved in the medical industry because the value. Now, I come back to that to say those companies who are going to innovate the medical industry, the biotechs, yes, you do want to own. You do want to own those. Then we have the banking industry. You saw a lot of the banking industry in that bottom 250. They're going to disappear. I saw something on Squawk Box the other day, and they asked one of these panelists, what's your pick for this week? And they said, J.P. Morgan. J.P. Morgan has a bright future in front of it. You got to be kidding me. Doesn't this guy know about digital wallets? Doesn't this guy know my frustration of dealing with the banks? Doesn't he know that if I call the bank and say, I got a question on this, I need to expect to spend 45 minutes on the phone as they don't answer their phone? And they put me on hold. And then when I talk to somebody, they say, well, you need to talk to another department. You need to go there. Well, come on. You can't survive that way. So the banking industry is going away. It is going to be disrupted. It's going to be changed. And you need to get away from it. Then let's talk about the manufacturing industry. Those people who employ thousands of people in big factories, who people lift heavy things and move things around and do menial tasks. Robots are going to take them out. They're going to, think about this, they're going to lower the cost. Does a robot that costs you $50,000 purchase, and maybe you've got a $5,000 cost per year to maintain it, is that cheaper than 3 shifts of people for at $25 an hour that have to have vacation pay, health insurance, and pregnancy or child care, whatever? Which is in the future? Is that deflationary? Yeah. Cost of manufacturing is going to come down with robots, with 3D printing. I was just reading an article about a company who is hiring artists to paint pictures of fabrics so they can then scan that painting and feed it into a computer to put it into a 3D printer with 9,000 needles in it that can print that fabric and then make a dress out of it for your wife or for you. This is the future. That's deflationary. We don't have to buy our fabrics from ladies who are in India stitching things like my jeans. Make your own jeans that come from India. the clothes I buy that come from China. That's all coming back here, but it's going to be deflationary because we're eliminating the highest cost of that, and that is labor. So we need to understand that that's where the world is going, and it's not inflationary, it's deflationary because disruption is going to change it. Last night, this was really brought home to me. Last night there was a concert. This would have been Saturday night. It was carried on several TV stations, ABC and NBC, I believe. And it was called VIX Concert, VIX for Vaccine Concert. And they raised $302 million for charity, for buying vaccines for countries and people who can't pay for vaccines. $302 million in a roughly, probably from the production to the end of it, in probably a 4-hour period of time. The American Cancer Society, though, on the other hand, raised $750 million over the past year. It cost them in salaries and benefits, it cost them 55% of that. They spent another 35% of it on advertising and promotion to raise more money the following year. So all in all, for every dollar that they raised, roughly 10 cents of it made it to their charitable cause. But last night, at no cost, they raised $302 million. That all goes for its cause. Did I just describe to you an antiquated industry? Did I just describe to you an inflated industry that if we transfer the way we do something to use modern technology, we can eliminate 90% of the cost, and we can become more efficient, and we can deflate the cost of doing business, not inflate. Now, at the same time, we're seeing that Joe Biden is talking about we need to build our infrastructure. We need to give more relief package. We need to build 5G. We need to create jobs. Well, I still go back to Amazon, Google, Apple, Microsoft. Where do they make most of their money? What is the source of their money? Is it gold? No. Is it oil? No. What is it? It's data. And they all raise their hand when I ask them the question, who owns that data? They'll say, well, Carrie, that's your data. You own it. Okay. Then why aren't you paying me for it? Now, then I would ask you the question, who owns most of the data in the United States? The stockpile of most of the data. The federal government does. Okay? They have all our tax returns. They have all this data. Why isn't Google and Apple paying them for it? Why are we paying taxes? And we're giving our data away, and Amazon doesn't pay any taxes because of the loopholes, but they make their money off of our data. And the same for Facebook. Why are we being taxed? Why do we need tax? Why don't these huge companies just pay the people who own the data for their data? Then you and I would never have to be taxed anymore. They would just pay us for our data, and they would pay the government for the data they have. Is this far-fetched? Am I crazy? I don't think so. I think I'm disruptive. I think that the world is changing, and most of us haven't noticed it. Most of us haven't noticed that the world we lived in 2020 was caused by a virus. And that is going to change the world we live in. It's going to change the way we look at medicine. It's going to change the way we look at our supply chain. It's going to change the way we look at data and the value of it and who gets paid for it and how we should be taxed and how our world should run. Is this so far out there? Am I an old man who's just living on illusions? I don't think so. I think I have a window into the future because I've experienced so much of the past. I have seen the change. And there will be more change in the next 10 years than there was in the preceding 100 years. As far as an investor, you need to recognize what we have experienced in the last 3 months is an enigma. And that those stocks that were worth 50% more 3 months ago because of the recognition of the change they were going to make and the innovation that they were going to be a part of are still worth every bit of it and will become worth more. There is no reason, no logical reason why CRISPR is down 30% other than a stock market who doesn't recognize the true value of it in the future. They are basing their price that they're willing to pay for CRISPR today on the hallucinations of higher taxes, higher interest rates. You know, interest rates have doubled. Yeah, they went from 0.07% to 1.4%. Come on. When I bought my first house, the interest rates were 14%. Historically, the average interest rate is 8%. So we're worried about inflation because interest rates have doubled from 0.07 to 1.4. Be realistic. This is a piece of time that is being driven by unrealistic expectations. The truth is, find the undervalued assets. If you want to know what I believe they are, go to my Patreon, go to bestofusinvestors.com, sign up for Patreon, go look at my portfolio, because on June 1st, when I pick up that $425,000 check, it's all going right there. They're on bargain prices. They're in genome sequencing, 3D printing, robotics, electric vehicles, and fintech. Going to revolutionize the world. Okay, I'm excited. What an opportunity. Talk to you later.